Okay. Okay.
We're ready. Okay. So they haven't restricted it. Say it's your African. Anything is properly stapled. Why are there so many? Let me start with it. Printed twice. Okay. It's 2 copies.
Good morning, everyone. I hope you can hear me. Good morning, everyone. I hope you can hear me. Hello. Somebody signal to me if you can hear me.
I can hear you.
Oh, good morning, sir. Okay, let's go. Good morning, everyone. Apologies for the 1 minute delay in our start time. But hey, you're all welcome to the 15th edition of the Alpha Morgan Quarterly Wealth and Economic Review with Bismarck Rwani. Thank you all for joining today once again as we review the Nigerian and global economy. And I'm certain we will have a truly insightful session today. My name is Doyin Anyehe. I'm an executive director with Alpha Morgan Bank, and I'm excited to be your moderator for today. Well, some things seem to be improving since our last review. We've had headline inflation easing further to 23.71%, down from the March figure of 24.23, and further from the January figure of 24.48%. At the MPC yesterday, we saw that the CBN yet again maintained MPR at 27.5%. At least it's not worsening. We still have relative exchange rate stability. All share index seems to be on a steady rise. Crypto prices have rallied, even though we're not playing in crypto, but something to consider. But the big question is, as a consumer and as an investor, do you feel it in your pockets and in your portfolios? And what is the direction? These are some of the questions that our speaker, Bismarck Rwani, the Managing Director and Chief Executive of Financial Derivatives Company Limited, will help us answer today in his presentation. Bismarck, you're welcome, sir. And thank you for always being a voice of clarity for our listening audience. It's a pleasure to have you with us today, sir. Thank you.
Thank you very much for having me. And good morning, ladies and gentlemen, to this discussion this morning.
Thank you, sir.
Um,
Here with us this morning is our host, Adi Buraimo. He is the Managing Director of Alpha Morgan Bank. You're welcome, sir. And we also have George Imade, a director with Alpha Morgan, who will give the vote of thanks at the end of the program. Our session today will follow the usual pattern where we take questions after Bismarck's presentation. So participants, we kindly ask that you type your questions in the Q&A box, and we'll get to as many questions as we can take at the end. But before we start, I want to use the opportunity to invite our participants today to open an account with Alpha Morgan Bank. We'll share a barcode with you in the chat to facilitate this, and we look forward to being your banking partner and your banking financial services server. Thank you all once again, and let's get started. Over to you, sir.
Okay, thank you very much, morning, ladies and gentlemen. Today is 21st of May, and they usually say in the markets, sell in May and go away because you never know what's going to come your way, right? So we start off today highlighting a few things that are relevant. Most of the participants here are wealth managers, investors who are looking for value and also looking for direction. What is this week started off with two major events in Nigeria. One, the Capital Market Committee meeting of the Securities and Exchange Commission and all the capital market operators. Two, the central bank had their monetary policy committee meeting after a 90-day hiatus. So why is this important? It's important because the Capital Market Committee, where we had the Federal Minister of Finance, and we had the Director General and all the commissioners of the Securities and Exchange Commission. It is happening in a quarter in which we had the CBEX and all sorts of wonder banks and things that happened. And they had to allay the fears and anxiety of what I would call innocent and greedy investors who were looking for returns that don't exist. So I had a session, I had a discussion with the DG of SEC, and I said, why was CBEX? Well, he said two things. One, CBEX picked Ibadan as their location, not because the investors that invested in CBEX were not in Ibadan, they were all across the country, but they look for a location where people are investment ignorant too, and where people just buy whatever they are told. So I think that was the first thing. He did also comment to the effect that some of the people who benefited from returns, being greedy is not just it's not an ignorance, but also he tried to make it look like a crime. In other words, if I went and invested in CBEX and I got 30% return in a month or 60% return in a month, and I got my money because I introduced somebody else to come and join, and I got my money out. Now CBEX has gone down. They are saying that the money I got out, that 60% I got, is a return on criminal activity. And therefore, they're going to get them to regurgitate the things they got. So if you invested successfully and got your money, you may be in a situation where you are going to have to come up and regurgitate what you got. So that next time when they tell you this, if it's too good to be true, then it cannot be true. You would know what to do. But that's a fact call because, but I just want to put that on the table. Two, they launched the Investment and Securities Act. It was relaunched and all that, which prescribes punishments for those who breach the investment and securities regulations in Nigeria. There are many regulations there which we as managers, those issuing houses, those analysts who are making recommendations, all have to be careful about what their responsibilities are. That was the first point, right? And we've seen the collective investor schemes and all of that go up. There, about 8 years ago or so, I think Jimmy Ike and all these guys were used to make a movie, a couple of movies on how to avoid wonder banks and how to avoid Ponzi schemes, not just wonder banks. Now, Those things are on the website of Security and Exchange Commission. When you look at the number of people that watch those movies, you are lucky to get 10 people in the whole year that watch those movies, and that is supposed to protect investors. So, but if I put a movie out that says that you can get 100% return, right, in 1 hour, before you know it, millions of people would have watched it. So the things that are genuine are not being followed, right? But the things that are not genuine are the ones that are being followed. That's the first thing. Second, the monetary policy. So we have that. They launched the ISA. They're going to be screaming from now to tomorrow about please beware, buyer beware, don't invest in Ponzi schemes, do not invest until the SEC registers people. CBEX was not registered. CBEX got $800 million worth of investments which disappeared. I understand the total loss is about the same figure. But apart from CBEX, there were many others and are being launched every day. And people are, jumping into it across the country. My answer is that investment culture is the Nigerian investor or the investors in this market are not that sophisticated, but they have a high greed threshold, right? They want returns that compensate them for cost of living crisis, for inflation, and all these other things. So we park that. Now I'll go to the second point. The second point is that the Monetary Policy Committee has come up to say, look, we had our last meeting 90 days ago. We had one yesterday and announced we kept all the parameters stable. They did make a comment as well that the banking system is sound, solid, and safe because of some rumors and all of that are all over the place about banking system instability. So one, the currency is stable. Two, the financial conditions and monetary conditions are normal. And three, the monetary policy is moving in the same direction to support fiscal policy. The central bank didn't go as far as being, it's not a propagandist channel which just talks about things are great. Things are better doesn't mean things are great. I think we should get that clear. Things are getting better. So if your score in mathematics was 35 and you've now scored 40, right, over 100, you have done better, but you have not passed, right? So what the Nigerian investors and public are looking for, they are looking for pass mark. They are not looking for improvement along that line. You must improve before you can pass anyway. So improvement is the first step to get it to pass it. I think that so central bank has laid the marker, and the next meeting is 60 days from today, and many things are going to happen. 60 days from today, we share the slides. Let's share our slides now. Just 1 minute. So we want to share what we think is the outlook. But you see what has happened in the last 100 days, so to speak, from January 20th, when Donald Trump came to power, is that there have been at least 150 or 200 executive orders signed by the US president, ranging from tariff to immigration to security to trade to global warming and all of that. So we have to we'll look at that. We are going to look at the Nigerian economy, and I've just started by saying two notable events. One, the Capital Market Committee meeting, which is done every quarter, and we've had the Monetary Policy Committee meeting as well. We'll look at sectors and opportunities for investment and risks and then the outlook. And thank you very much for being here. So let's start with a few quotes. Hassan Rouhani, former Iranian president, Rafsanjani and others. No country by itself in an isolated manner would ever be able to effectively address the challenges it faces. Basically, there's no Robinson Crusoe economy. The world is interrelated. That's
Recording in progress.
that is what this is saying. Nigeria's economy is becoming increasingly connected and integrated with the global economy. We know that Pope is Catholic. Now, what are the notable global events that we need to? One is that by the time the tariffs and all of the draining the swamp was announced by Trump, the world went into turmoil and everybody thought that the markets were going to collapse. But you can be the strongest man in the world, you can be the leader of the global world's strongest economy, but at the end of the day, you are dealing with markets. So what have we seen? We've seen the price of gold go up 20% because of people's fears. You've seen the Nigerian stock market go up by 2.6%. You've seen treasury bills in Nigeria up to 18%, does not compensate you for inflation. So year to date, we've seen trade negotiations and renegotiations, but something is important that you must note, which is not here, which is that there have been 4 elections since Trump was inaugurated. One in Wisconsin, which the Trump favored candidate lost. Second one in Canada, where the Canadian Liberal Party was considered dead, but all of a sudden Mike Carney and his party won the election, which was a vote against the annexation, so to speak, of Canada. We saw what happened in Australia, and we saw what happened in Germany. Therefore, the ultra-right-wing philosophy and rhetoric is not going down well with electorates across the world. 2, we've seen a lot of pressure on the Federal Reserve Bank and banks to bring down interest rates. They have resisted that because the moment uncertainty increases, if you go and bring down interest rates, you set the economy on a path of a tailspin. Now, now we have the tariff back and forth, and we've of course, I've said it earlier on that the markets have gone into some kind of tailspin and then back up again, buying on the dip. We've seen what has happened to crypto and Bitcoin and cryptocurrencies, and there has been increased appetite for risk and risk-free securities. In other words, people are afraid, and when people are afraid, they do not invest. So what do we have? We've had a Moody's downgrade of the US from whatever it is, that's just going through the motions. We've seen inflation drop marginally because people, the impact of the tariffs on general level of prices will begin to appear in next month. There's a 90-day suspension of all of these things while Trump is doing his deals with others. So what have we seen as well? We've seen the US share of of global reserve currencies. You know what the reserve currency is? That the reserve currency is the currency where you store value. And the ultimate reserve currency before, when we started, was what we call the gold standard. The Bank of England promises to pay you this amount in gold. That's why it was called £1. Pound was a weight. You give the goldsmith gives you give the goldsmith, he takes gold from you, right? And he issues you a promise, that come, bring, whenever you come, when you want it, I give you back your gold. That's how currency started. And that before you now had the Bank of England and all these things started with the goldsmiths, the Jewish goldsmiths. Now we went to semi-gold standard. We went from gold standard to semi-gold standard to a dollar standard. All right. So in 1971, the United States stopped converting dollars to gold. All right. And that's what the whole thing about your currency, our problem, our currency, your problem. Kenneth Rogoff wrote that book now about our currency, your problem. Now, in 2020, 61% of the world countries kept their reserves in dollars. The rest was in all sorts of things. By 2021, that dropped to 59, and by 2025, It's now down to 57% or 56%. The question is, where have the other countries gone? Where have they moved their money to? And surprise, surprise, um, nobody will guess. People think that it's gone to China and all that. But strangely enough, and I don't know that anybody in this audience or anybody in this room can tell me exactly where they moved. They moved to two main currencies. First of all, they moved partly to gold, but two currencies benefited from that shift. Number one, Australian dollar, and number two, Canadian dollar. So the 5-6% shift in reserves went to Australia, Canada this year, and of course, to a large extent, the the euro, some gold. So it's important. So as we sit here, look for, if you want to preserve value, you should be looking for currencies. Look for the dollar is always the almighty dollar, but we have to know that. But again, don't forget Australian dollar and Canadian dollar are here. Now, what are the alternative assets? We've gone through this. You've seen the price of gold over 3,000, we got to 3,400, 3,500. So the return on gold so far is 28%. And if you invested in dollars, you have lost about -5% more or less. The US, so asset classes outlook. US equities, it's a different story because the US equities are related to interest rates. If US inflation increases, then the chances that interest rates will be brought down and therefore equities will rise is a different story. But because Trump is now becoming more realistic and we think that and striking deals with these bilateral deals with different countries, from what I hear, the Chinese got a better part of the Americans in the deals because the Chinese, if you look at Alibaba, look at TikTok, look at DeepSeek as against NVIDIA, you find that the Chinese already planned and anticipated all of these things before the Americans made their move. In any case, the Chinese have been accused of intellectual property theft and spying and all sorts of things. Remember 5G, remember Huawei, remember? So they are always one step or even 3 steps ahead of the rest of the world. Well, and that's why they moved from being a $9 or $7 trillion economy to what it is now is about a 17 or $18 trillion economy. The Road and Belt Initiative. So the Chinese they're not playing. They know. And if your population is 1.4 billion people, you need to be efficient to feed them. If not, they will feed on themselves and feed on you. So two, the Nigerian stock market, again, Nigerian stock market suffered severely in the last 2-3 years because of exchange rate losses, international debt on the balance sheets of Nigerian companies, and so on and so on. So what are we seeing? We're now beginning to see Nigerian equities begin to climb back up. I think yesterday we had MTN suing 6 banks over some racket there. But you can see that the telco companies are doing well. We've seen Seplat doing well. So there is some. We'll come back to that later on. The Nigerian Treasury bills, well, it's still depending on what you believe. The yields on our Treasury bills are closer today to the rate of inflation, the new rate of inflation. Whether we can rely on the new rate of inflation versus the old rate of inflation is another story, but at least. But one thing is clear, anecdotally and empirically, it will appear that prices are moderating. Are they moderating because fundamentally we've solved some of the structural problems? No. They are moderating because incomes are constrained, and they are moderating because people are now beginning to more or less give up on the fact that things are going to get better, right? In a hurry. They know that things are going to get better, but it's going to take a long time before the impact is felt. Commodities, gold, diamonds, and all the other things, we're having that. But you see, one of the assumptions at the beginning of this year was that Trump did promise that in 24 hours he will stop the Ukraine-Russian war. It's been 120 days, and I think yesterday, whatever it is, yesterday he said, look, if these guys are not going to sort out themselves, I'm going to focus on Iran and other areas. Trump is a man with very short his attention span and his appetite for it goes to the next deal. He's already done deals with Saudi Arabia and all that. So that's where he is. It's moved on to another thing. So one thing I want you to note is also that before the year started, when we had our last meeting, one of the best stocks to have bought is Tesla. The richest man in the world remains Elon Musk. Elon Musk was worth about $417 billion. Now he's lost about $100 billion of value of his shares. But you never know. It doesn't take too long for the richest man in the world to become one of the others. So we are looking at what are the sectors that were thriving when we met last time? ESG sectors, global warming, green energy, and all the other things. Those have moved. The emphasis is no longer on those things, but the emphasis has reduced, not that they are no longer. So what your investors be doing? Always look for diversification. Always look for play the long game. This is not a sprint. This is a journey. And also remember that long term you look for value, short term you look for direction. So we are looking at direction now, but the long term value still lies in some of these things. And we are seeing that global commodities, whether we like it or not, Ukraine and Russia will sort out something. Russia wants to extract as much as possible from the global economy. Russia wants to ensure that NATO, the North Atlantic Treaty Organization, does not become a threat to them. And what it means also that your commodities, wheat, rice, and all of those things are going to be affected by those moves. Now, so we've gone through all of this. We think that one thing I can tell you clearly is that the fears of a global recession, the fears of the Trump disruption and the tariff wars and trade wars is grossly exaggerated, but it doesn't mean it still has an impact. And the uncertainty period also has an impact. If the world is on tenterhooks for 2 or 3 months, trying to second guess what America is going to do, that itself has a price to, and we'll pay a price for that. But it also gives us an opportunity. So what do we see? At the beginning of the year, we saw all our values, all our portfolios offered by almost 5, 6, 7, 8%, but now we've recovered some. So I would say so far we've hemorrhaged maybe 1.5 or 2%. So there's an opportunity to rebalance your portfolios. 2, always play the long game. I said it all along. Look for corporate earnings, look for the companies that have efficiency built into their DNA and are doing well. The whole story about being safe and all of that, it doesn't work. Another thing we have to note is that the World Bank, the IMF, and others have all, including Goldman Sachs and JP Morgan, have all increased their probability on their readings that the world economy is in turmoil. But the thing is that the managers of the global economy are still in place and they know what to do, and they will not allow what we call a hard landing. What you're going to have is what we call a soft landing, a Goldilocks economy. So these are the various recessions we've had between 1980 and now. Likely, not a recession is defined as 2 consecutive quarters of negative growth, but there are deep recessions, mild recessions, so I don't think that if we're the US probably going into recession, but it'll be a very mild recession. Okay, so are we going to have the talks between China and the US? Well, yes, the optics are there, but the world knows that we have to do things properly. So what you used to have, the whole idea, the US and the Western world were champions of free trade, what they call the General Agreement on Trade and Tariff, GATT, and they set up the World Trade Organization and all. So all of a sudden, the guys who are the proponents of free trade are now become the proponents of tariffs and protectionism. So, but any student of economics knows that the whole thing about Ricardo and policies of based on an assumption that there's no Robinson Crusoe and that people can sell the theory of comparative advantage, absolute advantage, and all of that. Said that if everybody emphasizes what it has the best advantage, the world total output in the world will increase. And since output divided by the population gives you income per capita, they believe that that is, and it's not a zero, it's a zero-sum game to some extent, but they want people to trade. But the terms of trade are in the favor of the developed and advanced economies as against the smaller economies. And we used to be the ones fighting for protectionism. Well, and when we had the theories in those days, when we had the old school economics, we had what we call the infant industry argument to protect industry. And when they get to a point, then we can now open up the market. But what we found out was the infant remained an infant forever. So, so, so they never, you put on the tariffs and then they never bring them down. They want more tariffs so that they want, because they, normal profits are normal profits. And there's rent, which is extraordinary profits. Once people start enjoying rent, they want it to continue forever. So the world is on its turned on its head. So how do this affect the Nigerian economy and Nigerian investors? I've already explained that. So let's not waste time on that. So a Nigerian investor, one, when your currency is a bit stable, it means store values in the Nigerian naira. Two, that the markets, alternative assets, and investment in equities, debt instruments are giving you yields that are close enough or maybe higher than the rate of inflation in some respects. So investors look out for those opportunities. Within those opportunities, what sectors are going to grow faster? Well, Nigeria reserves are up, the Nigerian currency is stable, therefore companies are now beginning to say, okay, maybe we bring some money. But one thing I must let you know is that many of the companies are domesticating their debt. In other words, you had all this Nestle, Heineken, Guinness, they were owing their parent companies. What they've done now is to borrow money locally to pay off their parent companies, and therefore the probability of foreign exchange losses because of translation effect on your payables to your parent company or your suppliers will be reduced. Therefore, the upside on profitability for Nigerian investment is going to be pretty huge. So we had about 67 trillion naira in market capitalization. We could see it go all the way to 70, 75 in the near term. So look out for those equities, but don't buy. This is not a tide that will lift all boats. It's a tide that will lift some boats. So also Nigerians are investing in different parts of the world. So what are they investing in? Investing in real estate, gold, equities. But one thing I must tell you, we've seen lately that the real estate market, yeah, especially in the United Kingdom, where Nigerians have a lot of their properties, has dropped sharply. So a lot of people have been trying to sell their houses in England, and they're getting values which are lower than probably when they went into. And it's not England as the whole market. London is high. So because of uh, what do you call it, internet and internet savviness or whatever it is, that a lot of people don't have to come into the city of London. They don't have to come into the city of New York. They can operate from wherever they are. So the premium of being in the downtown area is not as high. So real estate, watch out for real estate in Europe and in America. Yeah, some wobbling taking place. Real estate in Nigeria, it looks good now, but again, there's a lot of overbuilding in the Lagos metropolis, and therefore you have everywhere the blocks of flats everywhere. When an economy turns around or it goes into the negative cycle, first place that get hit is the real estate. So right now, rents are going to go up. People are going to invest all over the Victoria and Lekki and Ikoyi and Ikeja. But some things are going to change and change rapidly. Okay, so what are we going to see? If the central bank, we think by July, will have to bring down interest rates. Maybe 50 basis points or something. Is that enough to change things? Yes. Once interest rates come down, equity prices will go up and all that, and people borrow more. So please take a note of that. For Africa, African currencies are the main thing, but if you are buying into African economies, like Ghana was the Ghanaian economy was the weakest economy in the last 3-4 years, but they turned things around and they changed the government. There was position came in. The currency has become the strongest currency amongst the developing country economies and currencies. And so Ghana is looking interesting. South Africa, Ramaphosa is meeting with Trump today. And so if you are buying into Africa, we should be buying Ghana, buying South Africa, buying Kenya, and to a large extent, Tanzania equities. But again, Africa is vulnerable to shocks because we are 1 point something billion people, but we have the lowest income per capita, of course, naturally. But even within Africa, there are major differences between Angola on one hand and other countries. So what are the things that our African countries are, where do they have competitive advantage? Cobalt, manganese, graphite, copper. Again, all these things to do with batteries, electric vehicles, and now we are beginning to, there's a lot of emphasis in investment in education business. Because education is not just a social service now, it's a business. So we are having to see that. So here are the currencies that are undervalued. You can see on the left of this chart, Nigeria is the most undervalued, followed by Egypt, followed by Malawi. So you buy the undervalued currencies and you avoid the overvalued. Where are the overvalued currencies? Of course, all the French currencies, French-speaking countries. Seychelles, Angola, Mozambique, Ethiopia, Algeria, and Guinea. This is Guinea-Conakry. So these are, so the currencies you should be buying, Ghanaian cedi, Malawi, whatever it is, Nigerian naira, Kenyan shilling, Liberia, Rwanda, DRC. So what's happening in the Nigerian economy? The naira is fairly stable. We are downside of inflation, it will be at 26%, maybe according to IMF, but we don't think that. We think that's exaggerated. We've had Fitch revaluing giving us a boost, but we're still junk debt instrument. NMPC's change of new wine in an old bottle. So, or is it old wine in a new bottle? So, but it sounds more like new wine in an old bottle. So what we need to do is change the bottle. That's what we say. Inflation, of course, declined money supply growth at 23.9, but it was much higher than that. And the World Bank is saying that we'll have growth of 3.6 and inflation average of 22%. If that is the case, like I said, Nigerian institutions are domesticating a debt. Dangote has said he's going to bring down the price of petrol. But in those days when Dangote announces a decline in price of petrol, we see it on the pump price on gas stations. But recently it's been slower to get that. But thank God, price of petrol and price of diesel coming down marginally. Well, we have a problem because if the price of oil, the big thing here is that two things can happen. One, the Israelis want to attack the Iranian sites or whatever it is, nuclear sites. But the Iranians knew this a long time ago, so they spread their nuclear sites all over the place. So you would have to bomb the entire country and it won't work. So the threat of an Israeli attack, Iranian could push up the price of oil. But if that doesn't happen, and Trump, first visit that Trump had was Qatar, Saudi Arabia, UAE, all of these are oil producing countries. So he's done deals with those, right? And those guys, if he does that deal and does one with Iran, then we may see the price of oil drop below $60 a barrel, which could be a real problem to Nigeria. We have a model tells us that if the price of oil falls below $60 a barrel, we are going to be seeing, we would definitely have a situation where the naira will trade at 1,900 naira to a dollar, and inflation will spiral, and our economy could be on a slippery slope. In the meantime, for the first quarter of this year, you've seen investors, Nigerian pension fund assets had increased to about 23 trillion naira. The funds, IBTC equity fund is giving you 16% return. LBN bond fund is giving you 1.14 return. This for the quarter. So you're going to multiply by 4. FSD Coral Income Fund is giving you 12%. ARM Discovery Fund is giving you 15%. So these are not CBEX, these are actual genuine investments. But CBEX was giving you 30% a month, which was 90% a quarter, right? So if you are promising 90% a quarter, so compared to 12% on the highest one here. So what are the companies that the best performing stocks? Better Glass, because of Better Glass is because it's a subject of a predatory takeover. It belongs to the Leventis group and they're trying to sell out. What do? They make cans, bottles, and so on. But then there's a shift from glass bottles to plastic bottle, and then there are the recycling possibilities. So they spend a lot of money on this, but the drink manufacturers are trying to integrate backwards into this. UPDC, again, that belongs to, it's an affiliate of, it's a real estate business, and it's custodian and allied. Nestle has been up 660, revenues are up 666%, and consumer goods, Nescafe, Maggie Cube, Golden Morn, and so on and so forth. Milo, Then of course there's Suno Insurance Company. So there's increased economic activity. We're seeing that. Okay, central bank held NPR steady, and we are seeing this. The market today is going to rally because that was a good move. The companies that did PAT, Zenith Bank, take a look at the banks that are the companies that are looking very interesting to purchase. Zenith Bank is up 21. GT Bank had the 7 naira dividend, which we saw last time, and which is quite interesting. Zenith Bank, PAT is up 21%, capital adequacy ratio at 24%, and gross earnings, again, they're making money by going to bed. MTN PAT is up 134%, and this is the quarter in which they increase the telco tariff, so you're going to see more. And they've said that all things being equal, and they're very conservative that they will distribute dividends first quarter of 2026, but I think that they will distribute dividend much earlier. They don't want to overpromise and underdeliver. So Nestle, revenue up again 61% to 294 billion. Presco, PAT is up 98%, and Nigerian breweries again, which was all the guys were mired in losses there. So from an equity investment perspective, it's good. So this is just looking backwards. We don't look backward, look forward. So the monetary policy, as you loosen the monetary policy, people begin to borrow more, the pension index and all these things. So those things will make the economy look much better. So almost all sectors are going to be doing much better because once if you're growing at 3.6%, your population is at 2.6%, and your reserves are up, your currency is stable, everything begins to look much better. So the investment outlook is pretty much stronger. There's a strong, what we call the strong verticals for, right? So again, do you want to invest in the sectors? One thing though is that if there's a solution to the power supply, if there's a part solution to the power supply problem, then all of these variables will look more positive. If the price of oil does not fall below a particular level and the currency stays stable. So as an investor, if I'm forget about my nationality, I have only one nationality though, but forget about my nationality, I'll be looking at Nigeria closely to see what the opportunities are within that system. Because it's an inefficiently run economy, which an inefficiency creates opportunity because once you move any of the variables towards efficiency, the upside is, it's incredible. So key domestic indicators, you can see them here. There's more red than green and amber. The red is in growth in terms of Q2. But when they announce the Q1 GDP, based on whatever it is, you will see some improvement that the exchange rate is stable, parallel market stable, there's enough liquidity there. The central bank governor did announce yesterday that the balance of payment surplus was surplus, but was 1 billion coming down from 6. So that raised my eyebrows a bit. Trade balance, all positive, but again, and the NPR more likely to go lower. Treasury bills red, but the stock market capitalization green, gross external reserves green, crude oil production green, and but Brent oil price red. Okay, so what we are saying is that the economy is modeling through, not strategically, but one thing is good. The monetary policy authorities are primarily focused on, they're laser focused on making sure that they keep things. So if they did not do that, by now this economy will be underwater altogether. So now the fiscal space, how much money there has to be spent and how efficiently, how do you optimize this? That's the big problem. But the fiscal, so there's no way the fiscal space can continue the way it's doing now without creating problems. Therefore, let's say that fiscal will be average, monetary policy will be above average, and investment policy will be average. So outcomes, average, not above average. So what do we see here? The sectors that will expand or were expanding, this is historical, Q1 2025, what is likely to expand: ICT, financial services for whatever it is worth, agriculture, seasonality, transportation, oil refining. Also, we have to put in here the entertainment, movies, and all the other things. Those ones do not go well with the rainy season, because we are into the rainy season now, so we'll have some slack there. Manufacturing will increase because there's access to foreign exchange. Real estate continues to expand, but watch out for real estate because you're going to a market which is heading closer to the point of inflection where it will come down. Construction, local government, federal government, state government spending a lot of, there's so much construction to be done. Crude oil production, again, function of the pipeline vandalism and all. So the slow ones, mining and quarrying, tourism and hospitality, but I think that tourism and hospitality will turn up later on. Trade, retail and wholesale trade, good sector, but velocity of circulation of money is there, and exchange rate driven business. So trade and retail will not slow, it will pick up, but slowly. Education as a business, yes. It depends on what kind of education. Vocational academy, vocational education, doing very well. Primary education, doing very well. University and other education, not doing well at all. So the business opportunity is in where the opportunity is said that a child's success is determined in the first 3,000 days of his life. So 3,000 days of when you're 9 years old. So after 9, you're either a damaged goods or somebody, so the emphasis should be on how to invest in day 1 to the year 9, and that's where the money should be. GDP outlook, again, we're doing above global average. We're probably doing slightly across the African average, but potential GDP growth and optimizing of total factor productivity is one thing. Two is the whole informal economy and how it's captured in the GDP data. It's a big issue because sometimes they say, okay, this 3.3%, if you add the informal, but the informal economy is actually captured in the way the GDP is measured. So I'm not too sure whether that's a palliative or a stereotype of trying to explain inefficient economic outcomes. Now, inflation update said everything that we've rebased, we've done this and that, but the reality is that if you went back 1 year, I think I was on channels yesterday, went back a year, you'll see that about 43, 44% price increases. We just took goods randomly. But if you're taking this year and you're showing 21%, we're not too sure. But after a while, even when you rebase and change the basket, a trend begins to form because, okay, let me stop there because what's the price of rice? There was a story that price of rice would drop to 54%. We checked. I think it's more like 78,000. No, it went to 54,000. Those are because of the rumor that there was poisonous rice. But after a while, when people are eating the rice and they're not poisoned, then they go back buying it again. And so we are going to see those things change. But ordinarily speaking, I think that we are seeing a lot of stability in prices. But people now know what the cost of producing a good, the cost of importing a good, and we know how to sell it. And those margins are not as wide as they used to be. So we are going into a stable inflation environment to a moderating inflation environment. But it doesn't mean that prices will come down. It only means that the rate of increase in prices will not be as rapid as we knew in the past. Why? Because we're not going to have violent changes in the value of the currency. And we're not going to have violent changes in the price of petrol. Okay, so what do we expect? And what are the things that are driving inflation? Not just because tariffs. The big question in the room is what's going to happen to electricity tariffs? There's a question that we have to do something about it. Affordable electricity is a major problem. Do not be deceived by all this nonsense about telco tariffs. That when telco tariffs increase, as a matter of fact, an increase in telco tariffs means that the people invest and the telecom services are better utilized, could actually bring down price because inflation, because once there's proper information, that is a characteristic of a perfect market. And perfect markets, or markets, the margins between the margin between your selling and price and your cost, your selling price and your cost of doing business is always not as wide as it is when you have an imperfect market like a monopoly or oligopoly. So I want to bore you with economic jargon. One of the reasons why markets are perfect is because of information. And so that helps you. The internet accused me of saying that an increase in tariff could bring down prices. Yes, it does. And that is the truth. Because once I don't have information, you can be exploited. And so market information helps bring price to a more stable level. Okay, so fundamentally, trade surplus fell, but is it going to fall further? What we are looking for is what is going to happen. So we think trade surplus will probably increase if we produce more oil. External reserves will stay where it is. The central bank audited statements are out. Oil prices, we don't know, but if we have done the worst case scenario that if it drops below 50, we'll be at 1,900, 2,000 naira to $1, but an oil output will increase. So what's happening to our currency? This is what it is. TPP value is 1166, 27% undervalued, but as of today, IATA tickets rate of exchange is 1603. The parallel market is 1625, 1630. The official market is about 1599, in fact 1603 actually. The hamburger index is about 2690, and PPP is where you are. However, if the oil prices fall, then this 1166 becomes about 1400 or 1460. So this is what they did. They left parameters unchanged. So we are back to normal. So sector opportunities, we said the ICT, financial, agriculture, agro-processing, and transportation. Risks, are there risks? There are always risks there all the time, but big risk, we do not think that there'll be a cyber war. We do not think that US and China will go for, all those are very low probabilities. Moderate risks are extreme weather events. We are seeing some weather events in Nigeria. So there was a rain on Saturday. I wasn't in Lagos, but I understand the rain on Saturday was quite interesting. International aid stunts. Well, I don't think that will happen. So I think we're in a medium risk environment globally and even in Nigeria. Political risks, well, political risks are everywhere. Backlash against Trump, the backlash against incumbents, but then once the economy stabilizes, incumbents begin to have a field day. So final thoughts, Naira will depreciate a little bit, but will stay stable in that range, not more than, to not cross 1700, but inflation will moderate based on the old method. So what the rule of thumb, just add 10% to what the new one is, and that's what it is. So if you are 23%, add 10 is 33. And so what was the peak before? We had about 35, so we are down from 35 to 33 until we have a complete trend. In the Nigerian stock market, mixed performance, but a lot of companies are now doing better. So you can buy some equities. Primary, secondary, treasury bills. Some people are now moving from money market to the treasury bill rates. Again, having opening position of the money center banks are there. Companies will be marked down for dividends, but you don't have to worry. Please, we are not advising you to put your hands into crypto, but we don't understand it, and we don't want to recommend anything. So if you want to go into crypto, just remember that when you win big. When you lose everything. Right? So, well, so generally speaking, we think that the economy we are cautiously optimistic about the economy going very well, the markets responding accordingly. We are also happy that the banking sector is going to do well. So Alpha Morgan Bank, as well as Alpha Morgan Wealth Management, are bound to benefit from this. Thank you very much.
Thank you so much. Thank you. There's always just so much to unpack from the presentations, and as usual, questions are coming in. But before we take questions, I'd like to welcome our host, Ade Buraimo, Managing Director of Alpha Morgan Bank, for a few comments. Over to you, Ade.
Yeah, doing. Thank you. Oga, thank you so much, sir. Thank you for always being there every time for us. And I want to thank all the participants, the regular and the new people joining us. We'll continue to bring this program to you. And but we'd like to say something quickly. Afamugan Bank has started. We are over 60 days old now, and we are seeing traction from everywhere. We want to thank all our members, all our friends that have opened account with us. If you have opened your account, try and fund it. If you have not opened account, there's a code on the screen now. Just scan it, and it will take you straight to where and how you can open your account. And you need anything you want to fund, please feel free to reach out to us. We're available to support you. And you have idle fund, you want to invest both Naira and dollar, feel free to let us know. I want to say thank you once again to our speaker. And let's go to the question and answer session. Doing over to you. Thank you so much.
Hey, thank you, sir. One of the questions that we have here, somebody, obviously we have a diverse participant base here, and somebody was wondering at how do this country currency uncertainties affect the prices of goods sent to targeted countries. We can see how, Trump's tariff immediately had an effect on goods from Canada, from China, and all of that. And she's asking, Mary Agnes is asking, what is the future of entrepreneurs that operate small businesses that are not geared towards real estate, oil and gas, and consumables, and all of that? How do the expectation rates, how would the export rates and all of that affect, the prices of goods sent to these countries?
Okay, thank you very much. That's a very important question. One, 001 economics says money is what money can buy. So people are not, if you have all the money in the world and you have no, assuming that you didn't go to the market and you have money in the house, right? You're locked in a room with all the money and the doors are locked. You don't bring food. You are likely going to end up dying there with all the money. So money is as good as the goods you can buy with it. What are the goods that you can buy with it? The goods you are buying with it are both produced domestically or internationally. So you either go to the market when you go to buy things, Lugbe market in Abuja, or you go and import the things from China, from Canada, from everywhere. If you are importing from those countries, the value of their currencies become important. So why I raised this was because the currency itself, right? The dominant currency is the US dollar. So what has happened to the US dollar relative to all the other currencies in the world? The US dollar in the last 100 days has fallen in value. But your own currency has fallen against the US dollar, which means if you against the other currencies, your currency has actually fallen more. But that's all right. If the currency falls in value, but you can get the currency, you can get the forex when you want it. That means you can get the goods when you want it, right? So that is why inflation is stabilizing, not because, yes, the currency is more expensive, but I can get it when I want it. And what used to happen in the past, I would buy goods for the next 200 days because I don't know when I'm going to get currency now. But now, since I can get my currency anytime I want it, I can buy for 30 days. So by this time last year, people are already projecting for what they will order for Christmas. But this year, nobody's talking about that because how are you going to start buying in May for things that are going to happen in December? So it's a different story. So one, as a small business, the small businesses and households are the most important component of this economy. As a matter of fact, if you take private businesses, that is the aggregate consumption, it comes about almost 60% or 63% of GDP. Government investment is one of the lowest points, net export, and then investments. So small businesses are the ones, when you put yourself together, that makes this economy tick. If the small businesses are in trouble, then the economy is in trouble. I think that is clear. And that is why the government policy, the fiscal policies, they talk about SMEDAN, we talk about palliatives, we talk about fiscal stimulus, we talk about BOI intervention, and all, Alpha Morgan, all the banks, they are lending money to small business, medium scale businesses and all of that. So I don't think you should worry about where global currency volatility is as natural as anything. But what is on? The volatility level is dropping because the number one currency in the world, which is the US dollar, is going to be more stable as we go ahead because Mr. Trump has found out two things. One, the markets, when he makes the wrong statement, the markets crash. Two, the Federal Reserve is totally and completely independent of his wishes. He tried to said he was going to fire Powell, couldn't fire him. The Powell held his stand. The markets like that, and the markets are hailing Powell. So don't worry too much. As long as the currency is stable and trading within a range, you can import your goods, you can export your goods, you can buy locally, and you'll benefit from that. So don't lose any sleep about currency volatility.
I thank you for that. Emeka Atuma has two questions I'm going to combine. The first one is, where is it now? So, if the inflation rate is supposed to affect economic activity in the country, he's surprised that the naira is depreciating, although I don't think it is. I mean, the statistics show that
Not that much, but
not that much, yeah. But inflation is dropping. What is your view? And then he also was asking about the PPP model, which is supposedly works in the long term, but not in the short to the medium term. Can you shed a bit more light on that model?
No, PPP is just you divide the price of goods in one country, the price of goods in this country to tell you whether you are undervalued or overvalued. Typically, over a 3 to 5 year period, the currency.
Sorry about that.
So what happens, the currency moves towards its PPP value over time. So let us go back about a year ago when Biden was still in office and the pound was trading at about $1.26 to £1. Today it's about 1.3334. As a matter of fact, this morning, the British inflation rate came out at 3.5%, which is much higher. The target for the Bank of England is to bring inflation to 2%. Now it's 1.5% above, and we've just started. So that tells you something. Why is it important? Because I think 35% of Nigerians in diaspora, first or second generation, live in the United Kingdom. So if inflation is high in the United Kingdom, it means the Bank of England is more likely than not to increase interest rates. If they increase interest rates, then my brother in London or in Birmingham, my nephew, will now have to pay higher for his mortgage, pay higher for his credit card debt, and he will have less money to send back to me. But right now it's 2,037, I think, 2,000 for a pound, right? So if he cannot send money, if he was sending me £100 every month, and I was getting that, and I could live on that. Now he can only send me £50, means I have to manage. So inflation increasing, but marginally, the currency is stable. But don't forget the price of diesel and price of petrol is coming down in Nigeria, as a small business and as a consumer. When you put everything together, it means that by July, you'll be slightly better than you are in May. But by September, all things being equal, and we don't know, we touch wood, you might be slightly better than you were in July, which means that as we approach Christmas, you'll probably have a bigger hamper this year than you had last year, thanks to Alpha Morgan Bank.
Okay. Very important question from Tunde Alagmi. How can I buy gold?
Let me ask. There's a gold exchange, right? So if you can buy crypto, you can buy gold. All you have to do, first of all, there are 5 gold big dealers in the world: Oppenheimer, De Beers, can't remember the other names. right? No, those are diamond dealers as well. That's same gold dealers. So, but it's about 3,500 an ounce, $3,400 an ounce. All the women are wearing gold earrings. So where did they get it from? So I'm not sure where you can get, but if the women can tell you where they get their gold earrings, then you can get your gold. Okay.
No, I guess he was looking at the the
You're
gold.
buying the gold, you can buy the commodities. You can buy,
The
you can have the
commodity,
gold
yeah.
position. So if you ask your bank, will buy gold and they hold it for you. Not that they will bring the gold to give to you, but they hold it. And if the price of gold increases, then you can load it. It's like you want to buy Microsoft shares, you want to buy Tesla shares, so you can buy gold. There's gold, there's a gold index. So you just buy it and sell it. I have never traded in commodities, but I think quite frankly I like gold. But they say uh, diamonds are forever, right? Or diamonds are a woman's best friend, right? So
Gold,
I'll
gold is
go with
really
diamonds,
fun.
right? I prefer diamonds to gold.
Okay, two important questions on the federal government. So
Yes.
one of our participants would like to know, the government seems to be pushing through with FGN local bonds and dollar bonds. Do we see the potential risk of default on coupon payments, or full payment at maturity like it was experienced with Ghana, particularly in line of your submission about the potential of the US trade deals with the Iranian, Dubai, and the like countries, which may potentially lower the price of fuel. And then second question, which is also about the federal government from Benson. He wants to know the $75 per barrel and 1,450 production per day on Nigeria's budget performance, given that there's a budget gap of 13.5 trillion and the gap keeps getting wider.
No. First of all, Nigeria cannot afford to default. No, Nigerian economy is in the good old days was about $500 billion. Ghana was less than 100. The Ghanaian economy is probably smaller than the size of the Lagos state economy. So Nigeria cannot afford to default. If Nigeria needs to default as much as it needs a bullet in its head, we cannot afford to default. And we never, even in the bad days when we had tradable debt and all that, we never default. What we do is we refinance our obligations as they mature, right? We are an oil producing country. We have gas, we have other resources. So what will happen is that we will, as a country, reduce the amount of stealing so that we can have money to pay our debt. Because if we don't pay our debt and there's a default, there'll be nothing to steal. So nothing to grow with. So you have to put the stealing and the growing put together to get to somewhere. So I think that's clear. So Nigeria will not default. Nigeria cannot afford to default, and Nigeria has never had a history of defaulting the financial debt. Ghana had its own problems, and I think the Ghanaians have overcome their own problems right now. So they are in a steady state. I think that you said about price of oil and production. Well, the production and the price, we can't do anything about the price. Because we are price takers. But we can do something about production. The production comes from the Niger Delta, and the Niger Delta is divided into the west and the east of the Niger Delta. But there are people who are from that part of the country, and they know, they know and they ought to know what can be done to bring it to a halt. So let me say that to start with, because NNPC has been structured, new board, new everything. The likelihood is that we are going to be seeing increased production. There'll be investments coming in. The president is from an oil company background, so he knows or I want to know the things that matter in that part of the country. And so part of the oil production problem is political, and part of it is technical. But the political emphasis is more than the technical. So we need investment, but you need to engage all the oil producing states, the oil producing companies, and the oil producing imperatives to be all aligned. So I would say that I won't be surprised if we get to 1.5 million barrels. And if we can get, first of all, $75 a barrel is a dream. I think we should, if we get 65, let's thank our stars and run with it. And if we do 1.5 million barrels plus gas, then how do we convert the gas and the oil and everything into improving power supply? We cannot grow with 5,000 megawatts. We need a minimum of 10 to 12,000 megawatts, and we can do that directly. So be optimistic, but continue touching wood that things don't get out.
Okay. Second to last question. Gabriel wants to know that the RSI for Nestle, Beta Glass, and those stock mentioned have gone into overbought region. Do you still advise buying the stock?
We say buy on the rumor, sell on the news. It's already news, so all I'm saying is that so there's no point in running in after. Once a taxi driver starts buying the stock, then you know that the stock is about to crash. Right now, people that are buying it are taxi drivers right now. Okay.
All right. And then so the US plans to impose a 5% remittance tax on dollar outflows. Tokumbo would like to know how will that affect our government revenues in terms of diaspora revenue?
No, not
Sorry,
for
in terms of diaspora remittance, sorry.
it affects. The central bank governor answered that question yesterday and said he thinks that right now it's about the average cost of transferring money to Nigeria is about almost 5 to 7%. If you add another 5% tariff on it, it becomes 10%. It means that it becomes more expensive. And so the farmer is expecting her mother to send money from America. She was getting $100 before now, but when she got $100, she changed it to Naira at this rate. Now she has to pay the charge, right? But it's not just the US put the 5% tariff, it will affect us. What about our own tariffs here? ATM tariffs, these tariffs there, no. So, but if the US puts a 5% tariff, they will use the money to make their roads good, make their infrastructure work. What have we done with our own tariff increases there? I think that's the key thing. So yes, the effect is negative, but I can tell you that all I have to do is credit your account in New York. I don't have to remit the money. If I credit your account in New York, you have the money and you can use it to buy whatever it is in New York. So the diaspora remittance is when I'm saying transfer this money, right? So that will be in Nigeria, and she goes to the bank, Western Union, to collect it, and they credit charge. But if that will be as an account in New York and I've transferred it to her, and she'll use it to buy goods, to bring the goods into Nigeria. It's the same thing now, because if I can use the dollars that I was going to remit here to buy what they call this hair attachment, which I now sell. So I will not have to pay that charge, right? The only way I will do it is when I bring the hair attachments and sell it, have the Naira, same effect. But it has a negative, but it's very difficult for Donald Trump to impose that 5% tariff transfer charge, because it only means that what I'll do, I'll be using Canadian dollars or using euro or something else. I do not think it's going to work. I think it's just a threat to make sure that what he wants to do is to please keep your money in the US, don't bring them back home. But it's not. It's more than that. It's a bit more than that. So I wouldn't lose too much sleep about it. But again, the diaspora remittances have to be done efficiently. And don't forget, we are talking about almost $24, $25 billion worth. the 5% on that is a killer, right? So I don't think, but again, that's why Alpha Morgan and all the banks, they are, they are, they have, they have ways and means of making sure that you get credit. We just put, how much is the cost of a BVN for the Nigerian non-residents in, I think they just announced that 80,000 naira that you have to pay to get a BVN if you are a Nigerian resident abroad. So let's not just focus on what Trump is doing. Let's focus on our own tariffs.
No, okay.
Use our own tariffs to build
Yeah.
more, to build better water supply. So I think that's, to us, is very important.
All right. The last question we can take today, I'm going to combine two of them. And Anthony Eke wants to know whether you recommend moderation by the CBN in the exchange rate movement, considering the fact that the currency is undervalued and the consequent hardship and erosion of consumer income, the effect of that. And I'm going to combine that with Thaddeus's question about the diversification efforts of the government in the minerals and mining sector, and how could this potentially impact our FX earnings and exchange rate in the medium and long term?
Okay. Duration. I'm one of the proponents of being long Naira. When I say long Naira, I mean long Naira assets. That is, if I have assets in Naira, it includes real estate, property, and all that. Being long Naira cash is not as efficient as being long Naira assets. So, if I was selling a house, somebody told me I was at the Central Bank the other day. Somebody told me the 10 by 10 by 10 rule. This guy is not an economist, but is a respected guy. Said, if you go in 10 years, right, that what was the value of the Naira 10 years ago? And multiply by 10. So it was 160 Naira to a dollar. And therefore, if you multiply by 10, you have 1,600. So what was the price of a car 10 years ago, right? And now multiply by 10, so Corolla was 3 million or 5 million, now 50 million. And he went on and on and on about everything, and he had a factor of 10. And I don't know how he came up with that formula, but it was quite an interesting thing when he said everything. So, if you had a house, and then multiplied, you built it with 100 million, therefore 10, it's now 1 billion. So I was amazed. It came up with a long list of things, and all of them all added up very well. So I said, oh, wow, I've learned something new, right? So again, it plays into the duration, it plays into the 10 by 10 by 10 rule, right? And what can I say? Well, it's not going to go in that factor. If we do that in that factor too, if you are 10 years old, then you'll be 100 years old by the time, so it means that you have a mix. You have assets, you have cash, you have dollars and all that. Always play that game. It will, okay, what it meant was 10 years ago, this economy was so disequilibrated, right? That, so how far away were we from equilibrium? And that gave you that upside. Now that you are close to equilibrium, you will not have a 10 by 10 rule again. It's going to be maybe 2 or 1 or something. So it's all about general dynamic equilibrium. That's what it's all about. And so that was just somebody using this calculator to tell me that you're so far away from equilibrium, and therefore every 10 years you go closer, and then you lift the goalpost to go further. No, it's not that way. It's now we are not going. In the last 2 years, the currency has traded maximum of 1,700 or 1,900, and the minimum of 1,400. It's not the same thing as 400, and petrol has gone from 900 to 800 and something. It has not. So we are not seeing, because this guy also came with the 10 by 10 rule on the price of petrol was this, and and everything worked out the way he was telling me. So I was shocked when he was just telling me 1, 2, 3, 4, 5, and so I now played in my head that okay, yes, what the guy is telling me is that the amount of this equilibrium is a gap of 10. So basically, so can you measure the amount of this equilibrium economy and then multiply that? Then you know whether. So that's a different story. But that's just tells you we are not going to do it 10 by 10 by 10 by 10 anymore. We're just going to do it maybe 2 by 2 by 2 and that's what it is. Okay. Thank you.
All right, thank you, sir. I think we have to come to the, I mean, we have overshot our time by 25 minutes and we have to stop at some time. I'm sorry, participants, we can't take any more questions. And at this point, I will welcome my colleague, George Imade, for the closing remarks.
Thank you. Thank you very much, Doi. It's been a nice section. It's been a wonderful one. When we meet with our erudite speaker, Mr. Bismarck Rewani, we call him our prof. It's always a section that comes with great learning. Today is not a section, and we have benefited from your deep wealth of knowledge around all these issues we have been discussing. Clarity has been provided around what we're supposed to do on the state of the economy and what to look out for. And then the investment climate has been well diagnosed, or the prognoses are out there for us to know that the climate is good for us to invest. Even though things are improving, we are not yet at that pass mark level, but the opportunities are abound for us to be able to make investment. But the caution here is that we should do it very cautiously. And on this note, we want to thank Mr. Bismarck Rewani for always being there for us and providing this insight into what we are supposed to do to better our life economically and otherwise. Thank you so much, sir. And I want to also thank our audience. Your participation has been very, very wonderful. It's been an engaging section. You have made this program worthwhile, though you could not take all the questions, given the torrents of questions that have been available. But I want you to note that we appreciate you and we welcome you all the time. Without you, this webinar cannot be. You are the one that make it great and thick, and every edition has been an improvement on the past, all because of your great attendance and participation. So the man behind the scene, our own very GMD, Mr. Adebrahimo, we want to say thank you for ever making this program evergreen. You work tirelessly to ensure this is done and done timelessly. With all the resources you throw in, to give back to humanity, we can only say God bless you, and God will continue to bless you. And on this note, ladies and gentlemen, we want to draw the curtain and want to say that keep banking with Alpha Morgan Bank, keep investing through Alpha Morgan Capital. There is a lot to benefit from getting into the Alpha Morgan group. The offering is so great and marvelous. You will not be disappointed. Thank you for being part of this, and we look forward to the next edition. And as always, it's going to be better than this, as this one has been better than the previous. We appreciate you, and we say, God bless you. Do have a nice day.
Thank you. Bye-bye, everyone. See you at the next one.
Thank you all.